Everyone, on behalf of the Market 360 advisors here at Stewart-Peterson, I'm Bob Devenport, and this is your Dairy Week in Review from March 28th, 2014. So let's start out here by taking a look at where our CME dairy components settled at the conclusion of this week's trade. We did see a down week for cheese this week, with blocks settling at $2.38.5, down 4 1/4 cents. Barrels settled at $2.29 even, down 2 cents. It was another strong week for butter here, settling at $2 even, up 8 cents on the week. April whey finished at 65 3/4, down 3/4 cents, and April non-fat dry milk settled at 2.04 even, also down 3/4 cents. Going over to Class 3 futures, it was a mixed week here, with April finishing at 23.81, still posting a weekly gain of 28 cents, and May struggling a little bit more, finishing at 21.64, down 10 cents on the week. So that puts our 2014 average now down a little bit from last week at 20.88. That's a decline of 11 cents on the week. So let's get right into what we saw in cash cheese here this week. It was definitely a more active week than what we've seen over the past several weeks here. There was a good mix of offers and bids this week, but the fact that we did start to see the sellers jump back in and start offering carloads of both blocks and barrels means maybe that we did finally get to that price point there where we're going to see quite a bit more volume moving. However, we didn't see terrible declines this week, because there was still good buying interest there. As the sellers came in, the buyers are willing to step in and buy those right up. So potential losses were maybe minimized due to that here. So again here, the block barrel average declined 3 1/8 cents this week after hitting over $2.40 a pound at this week's high. Now the down week this week is actually the first down week we've seen in 6 weeks here for the block barrel average. So we had a pretty nice run up over the course of the past 5 weeks here. So seeing a down week is not really surprising here, especially after pushing into new record highs at around $2.40 a pound. So let's go over to Class 3 prices now. Here we have a daily chart of our second month contract, which is currently the April contract. Now April will roll into that front month spot on Wednesday of next week, in which May will then become that leading second month contract. But as you can see here, we did put in a new contract high for the month of April, and I guess I should say a new all-time high for Class 3 futures overall. On Monday, the April contract rallied 56 cents to a high of 24.15. Now we settled the day just off that high at 24.09. Now due to that push up into that $24 level, as to be expected, I think we did run into a lot of selling pressure up there, which I think is more of a psychological level than anything at this point, just wanting to sell that $24 milk. So during Tuesday and Wednesday sessions, we did pull back a little bit, but on Thursday we did rally another 52 cents back up above that 24 level. We weren't quite able to get above that 24.15 Monday high, but we did get close. And then on Friday, we ran into a little bit of selling pressure again here after Thursday's rally. So overall, on the week, it was a choppy one with big rallies and then a pullback, but we did take back most of those losses here, and we were still able to post a gain of 28 cents on the week. Now, with us continuing to see Class 3 futures rally like this, and again, push into all-time highs of 24.15, those are some extreme highs now. And as you can see on the chart here, we haven't really seen a huge pullback since we've been in this upward trending pattern. So that is a risk going forward, that we could just see a bit of a technical correction at some point. A little bit of a pullback in this market wouldn't be too surprising. So let's take a look at our NAS whey price. If you recall from a few videos back, we've been covering that whey traded within this pretty narrow sideways range here. However, at around the beginning of 2014, we did break out to the upside of that range, and whey has really been showing some strength since then. And that's probably something that also has been contributing to the support and the strength in Class 3 futures. Whey prices have actually been up 11 of 12 weeks now, and for the latest week reported, came in at just around 65.5 cents. So if we continue to see some strength there, that should hopefully continue to support Class 3 prices. But if we do see a correction in this market and we see it start working back down towards this range, that could put some pressure on milk prices as well. So going over to NAS powder now, and I'm sure you all know that powder has been the real market that's been just rallying really strongly here. Now this low comes in last spring around April of last year, and you can see that that was just a correction in this bigger upward trending pattern here, and since then we've really just been rallying sharply over the course of the past year here. However, it does seem that we maybe have reached a little bit of a top here in powder. We came in at 208.92 for the latest week reported, and we've been declining now for 2 weeks in a row, which throughout this whole uptrend right here since going all the way back to last spring, we have not really even seen 2 down weeks in a row. So is that a signal that we've maybe seen at least a short-term top here? It's tough to say at this point, but if we do continue to see things declining, that again could put some pressure on milk prices as well, specifically class 4 prices. So let's go over to our weekly dairy cow slaughter numbers here, and we've been trending quite a bit below where we've seen numbers come in at this time of year last year. So for the latest week reported, that's March 15th, weekly dairy cow slaughter came in at 60,800 head. That's down still 8.5% below the year-to-date numbers in 2013. So these high milk prices definitely are causing a little less culling here, despite the still strong cull prices overall, and I think that's to be expected. And from a seasonal standpoint, I think we can still expect to see weekly slaughter slowly decline until about mid-July here, where we generally put in that seasonal low. So taking a look at what's coming in the week ahead here, it's going to be a big day for the grain side of things on Monday. We'll see the USDA's prospective plantings and March 1st grain stocks report, so that could cause some volatility in the grain market. So again, that'll be released at 11 a.m. Central Time on Monday. That'll do it for us here today. On behalf of the Market 360 advisors here at Stewart-Peterson, thanks for watching and have a great weekend.